You are watching Market Watch, the brief overview of the key events from the world of finance. The past week was short, as banks and exchanges were closed due to the celebration of Thanksgiving. Nevertheless, the key U.S. stock indexes ended it in the green zone, although the activity of buyers was not very high. It is important to consider the risk of a significant increase in trading volatility. Firstly, after a long weekend, companies have a delayed demand. Secondly, the basic index of personal consumption expenditures in the United States will be published this week. In fact, this is a report on core inflation, which is very important for the Federal Reserve when deciding on the prospect of changing the conditions of monetary policy. It's no secret that inflation in the United States is rapidly declining, thereby significantly reducing the likelihood of an increase in the Fed's key interest rate. But for investors and voting members of the Monetary Committee of the Federal Reserve, it is important to understand how sustainable this process is. If the actual data turns out to be better than the previous and predicted, the US dollar will be under additional pressure from sellers. A decrease in core inflation at a faster pace will indicate not only that there is no reason to raise the rate, but will also make you think about reducing it. That is why the volatility of trading this week may increase markedly. It is noteworthy that the prospect of a change in the monetary policy of the Federal Reserve has an impact on all asset groups. Of course, it all starts with the US dollar, which has already noticeably weakened in a pair with major currencies. But gold is also extremely interested in easing monetary policy, which in turn will reduce the yield of government bonds and increase the investment attractiveness of the precious metal. Given the global geopolitical situation, gold may noticeably strengthen in the event of a real reduction in the key interest rate by the Federal Reserve. At the same time, it is enough for investors to get a hint or at least an objective reason to reduce the Fed's key interest rate. This will be enough to develop a more powerful wave of growth in the medium term. By tradition, we conclude our issue with an overview of the cryptocurrency market. Investors are optimistic about the future, because the conclusion of a deal between Binance and U.S. regulators indicates that the U.S. will now be able to better regulate the cryptocurrency market. Judging by the optimistic reaction of investors, they expect that now the U.S. Securities and Exchange Commission will begin issuing permits for the creation of Bitcoin ETFs. Any confirmation that at least one of the officially submitted applications can be approved in the coming days can provide additional support to Bitcoin. At the same time, another deadline shift by the decision of the Commission can provoke a strong wave of sales, significantly increasing the volatility of trading. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.